welcome to this webinar on succession planning and governance, the latest trends from the Middle East. I'm joined by an expert panel that's going to take you across all the latest happenings across the next 60 minutes. As always with our content, we like to make it interactive. I'd love to hear from participants in the chat, put questions in the Q&A. I'll be looking across both of those channels in order to bring questions to our panel as we move through. So let us know what you're thinking and make the most of this opportunity to ask some experts their views on the latest happenings. Before we get into the conversation, I'm going to ask each of the panelists to introduce themselves, what they do, and specifically their interest in the Saudi Arabian market. Perhaps starting with Sally Tennant. Welcome, Sally.
Thank you, David. So I'm the founder of Acorn Capital Advisors, having had a private banking and asset management background. And we provide strategic investment family office advice, philanthropic services, and act as an outsourced private office for those really busy entrepreneurs who don't want to run another business. We've had a number of clients in Saudi Arabia, particularly female clients that as a female-led business, where we sit on their investment committee or their foundation, or go in and do a kind of best practice review of their family office.
Fabulous. Great to have you with us today. Angela Calnan from Collas Crill. Welcome, Angela.
Hi, David. Hi, panel. Hi, viewers / listeners. Thanks very much for the opportunity to join you today. Really exciting. So I'm Angela Calnan. I'm head of private wealth at Collas Crill. So Collas Crill is an offshore law firm. We're based in the Channel Islands, so Jersey and Guernsey, and also in the Caribbean. So we're in the BVI and Cayman. So I'm based here in our sunny-ish Guernsey office today. And just by way of background, I've been in Guernsey for over 10 years now, but before that, I lived and worked in the UAE. And I've looked after Saudi families for most of my career, either directly or through our intermediary trustee clients. So they're a client base that I know really well, but I've never actually been to Saudi Arabia. So I'm going for the first time with David and a delegation that we've put together. So very excited about that. And also I'm very excited to learn from Sunita and those on the ground in Saudi, sort of the interesting developments there. But yeah, head of private wealth at Collas Crill. In the Guernsey office, we are a 4-partner, all-female-led team. So really excited to talk about the topics that are coming later in terms of the female dynamic, and as Sally mentioned as well. So thank you very much. Lovely to be here and look forward to chatting in a little while.
Great to have you with us. Hannah Wailoo from Withers. Welcome, Hannah.
Hello, David, and hi, everybody. Great to be here. So another lawyer. I'm a partner in the private client and tax team at Withers. So Withers is a global law firm. We operate on the ground in US, Europe, and Asia. I'm an English qualified private client lawyer. I do a lot of tax, succession, business planning with families. I also co-head the firm's Middle East practice, and that's in line with my career has taken me to, similarly to many on this panel, a lot of my clients are from the region. I've acted for quite a few Saudi families, dealing with largely originally relating to what they may be doing outside of the region, but more so recently about actually the family businesses and what's going on with wealth in the region. So my expertise really, and where I slot into this great panel of people, is talking about the legal structures and how they can kind of operate, hold wealth, pass it down to the next generation. So that's where I fit in.
Super. Dave Lange from Trident. Good to see you, Dave, calling from the UAE.
Yeah, hi, good afternoon, David, and good afternoon to all my fellow panelists and for everybody calling in today. So my name is Dave Lange. I'm the General Manager and Head of the DIFC office for Trident Trust here in Dubai. And for those of you that don't know, Trident is a global independent fiduciary service provider and also very heavily focused on corporate services as well. But from our DIFC office and from our Dubai office, our main focus in sort of getting to know and understand the Saudi market a little bit better is particularly in relation to structuring solutions for high net worth individuals and family businesses, as we've obviously seen a lot of wealth being generated from the Saudi market and the region as a whole. And so, you know, our job is to kind of work with the likes of Sunita and Hannah and the rest of the team, and Angela and some of the lawyers and tax advisors to basically help clients put structures in place to protect their assets and to assist them with succession planning.
Great to have you with us. Carlton Crabbe from Capital for Life, welcome.
Thanks, David. Good afternoon to everyone. My name is Carlton. I run and I'm CEO for Capital for Life. We are very much focused on high-value life insurance solutions, which is particularly prevalent or a need in the Middle East market. And Saudi is a very, very interesting market for us right now. We've had a huge uptick in business from that part of the world. And we put those structures in place around mainly succession planning and wealth creation. We also use high-value life insurance for retirement planning in certain structures, and we use obviously the structures that, you know, people like David and other people on the team will advise their clients to use. So yeah, and we can operate in over 200 countries globally, but Saudi is the focus for today.
Fabulous. And last but not least, Sunita Singh-Dalal from Hourani and Partners in Dubai. Great to see you again, Sunita. Thank you so much for joining this panel.
No, very welcome, and good afternoon to fellow panelists. This has been long in the making, hasn't it, David?
Yes, it certainly has.
And I'm delighted to see we've got such a great set of hosts and sponsors for I think will be the inaugural event, really, first of its kind in Saudi on the ground. I'm a partner with Hourani and Partners, and we are a Saudi UAE firm. A very niche firm as such, a great bunch of friendly advisors who've been working in the region for more than 15 years. And unlike others, we are truly a local firm. So the firm started more than 4 decades ago and was as old as the Emirates itself. And ironically, a family business. So I head up the private wealth and family offices practice. And definitely resonate with everyone else on the panel today in terms of today Saudi is the focus, very much so, not just for today's conversation, but frankly in general, in terms of work and what's going on the ground. And there's just been tremendous progression.
Fabulous. And just staying with you there, Sunita, I mean, perhaps you can give us some of the headline legal developments that are going on in the Kingdom of Saudi Arabia. There's so much change. Perhaps you could just summarize some of the things you're talking on with colleagues and clients in the firm.
Yes. Does this qualify for CLPD points or something? We're not going to be. No, I don't want to turn it into a legal lecture, but I think for everyone on the ground and listening around the world, hopefully to this, that one of the most significant changes that we've seen and much long and awaited, and I'm sure yet to be subject to even more change, is that of the new Saudi companies law. And for those people like Angela and Hannah and everyone who's familiar with the region joining us today, this brings tremendous progression because, for example, up till now, not only were we we had to work within a fairly rigid, archaic regulatory framework, if you like, that didn't allow much in terms of foreign direct investment, that didn't allow much in terms of independent direct investment. But from a family perspective, it also didn't harmonize with what families are actually doing in reality, which was in the background. Families are incredibly well arranged in Saudi, and the large business families, and amongst those that are familiar with these families, governance is something that has been spoken about for a long time and put in play for a long time. However, the game changer has been the fact that certain provisions can now be enshrined within the articles of a company. As opposed to just being sitting outside in a vacuum, if you like, within a standalone document, which would have been a family charter or a family constitution. So that actually gives it a lot of life, personality, and legal identity. I do apologize, there's some drilling going on. The expansion of our office is very reflective of what's going on in Saudi right now. Sorry. But that's been very, very significant, and it has been a game changer. And like that, we've then seen the sudden creation as well of the National Centre for Family Businesses, similar to what's going on in the UAE, frankly, where you see, even as recently as late last night, there was an announcement about supporting family businesses and introducing educational programs, executive educational programs here in the UAE, and that's what we plan to do in Saudi Arabia as well. For the sake of everyone's ears, I will mute myself and you can talk to other people for a little while. I'm so sorry.
No problem. Dave, I mean, an interesting angle is between obviously the UAE and Kingdom of Saudi Arabia. There's many relationships that go on there. I mean, how do you see working with families in Saudi Arabia from Dubai? What kind of activity do you see coming out of the region?
Yeah, so I think there's probably two directions of traffic, as it were, in terms of Saudi clients. One is those clients that are working with UAE sort of connections. So they're either trying to externalize their wealth, and that is either into the UAE markets or to offshore markets. And so we work with clients on structuring both of those pieces. So it's no sort of surprise to anybody on this call that the Dubai market is a very hot sort of market for investment at the moment. And so, we see a lot of Saudi clients and investors looking to invest in the Dubai sort of property market and uptick there. And then, of course, they've always been looking to externalize their assets into the typical jurisdictions like UK and Europe. So we see a lot of that going on. I think it's going to be interesting to see if we just sort of move away from sort of personal assets. It's going to be interesting to see what happens. I think the Saudi government has given a deadline to all companies that are looking to be headquartered in Saudi or basically in Saudi, in order to have access to government contracts. I think they've given them until the end of the year to move their headquarters there. So I think there's going to be a significant shift in sort of, from a business perspective at least, those companies that were probably based in UAE and flying in and flying out to Saudi. I think you're going to see a significant shift of that over the next sort of 6 to 12 months, where people are actually going to have to be sort of permanently based there.
What's your read on that, Sunita?
No, I completely agree with what Dave is saying, and reflective of that has been the flurry in activity of the registration of international law firms seeking to set up in Saudi on the ground, which I think is incredibly positive. We're actually helping many law firms with their application process. And I think as we start to create a more global but local legal advisory and professional advisory community, the end result is only going to be positive for the families on the ground who till now had to travel far and wide, perhaps, to receive advice. But more so, and more importantly, because it will then encourage a lot of the local advisors to actually become a lot more active with clients. And that's surely got to be a good thing. The development of the ecosystem will certainly increase the caliber and enhance the caliber of advisory work.
Thank you. Just coming a bit further afield, I mean, Dave mentioned the UK and links to the UK being very important. I mean, Hannah, how do you mentioned working with Saudi families over a long period of time. What kind of things might you be involved in working with them on?
Yeah, it's the same from here. So in my experience, I think historically, a lot of the UK Saudi connections are maybe a bit outbound, and actually an opportunity for advisors like me to be dealing with what these global families are doing outside of the jurisdiction. Always very busy. The UK's always been well connected with the Middle East as a whole, particularly Saudi, and that's from a business perspective and where people want to operate businesses and actually use kind of the rule of law and robustness in the UK, but also their personal footprints, like spending time in London and investing into London from actually more on a personal level as well. So I think those worlds have collided well to mean that these UK links with Saudi has always been very strong. And it does resonate. I think Sunita's right. I think there's always been quite a look from there to using the professional services from London, and also in the US as well, in terms of where that expertise lies. And that's shifting, definitely shifting. So we've all got to be sort of on board with that. And I think it's a great thing to see. So again, in terms of what I've seen, generally a lot of real estate, a lot of interest in London, family footprint, moving to the UK, spending time in the UK, educating children, universities has always been a pull. I think that will always remain. But I think maybe on the horizon is we're perhaps seeing a little bit more of activity of actually that generation going back to what now you're seeing with these family business, even more building locally, developing internally in those generations, moving home, expertise and everything home with them.
Thank you. And Angela, I mean, obviously with a UK footprint, as Hannah described, Channel Islands fits very neatly, doesn't it, for structuring? I mean, what sort of things might you see getting involved in from the Channel Islands, working in partnership with people perhaps who have built a footprint in the UK?
Yeah, so I mean, we would work in conjunction with firms like Hannah's, and sort of, as you say, the ease of travelling in and out of London from here is really appealing. So we would quite often see family office clients in their London base, but I think, as we touched on when we last spoke, when you were over here, David, we'll see Saudi clients coming here. And there's a surprising number of clients here, but you wouldn't sort of necessarily know that. It isn't immediately obvious. I think the sorts of structures that we're working on, and the appeal of the Channel Islands, certainly the ease of doing business. So the ease of opening banking relationships and things like that, where you have a jurisdiction that's sort of tried and tested and has a very high regulatory bar. It can be really persuasive to have clients setting up their structures here. The huge amount of jurisprudence that we have and the reliability of the courts is also pretty appealing. In terms of what we're doing, we've set up quite a few PTCs and we're running those out of the Channel Islands. Strangely, and perhaps not obviously, the clients aren't too overly concerned about paying tax. In fact, they sort of positively want to contribute tax. So we've got unusually some structures where the clients have retained a large ski chalet within a trust structure, pretty unheard of, but just for the ease of keeping everything together. So I think the clients are becoming a lot more sophisticated in the structures that they want and the structures that they run. On the PTCs that we're looking after, they're really hands-on, not just the first generation, but the second generation. So they'll sit with the trustees, they're on the board. Quite often the board of the PTCs will be reflective of the operating company within the structure. So again, sort of maybe not obviously, but there is a huge amount of awareness and sophistication with the clients in terms of how these structures are run. Yeah, certainly very interesting times. And to pick up on Dave's point, we are now able to work in unison with the UAE, for example, where they have the capability to now own onshore real estate, which was a real outlier before and a problem asset. So now we have a lot more tools in the toolbox with providers that are based in the region, and we can collaborate really easily across a client mandate with them. So really exciting times.
Fabulous. And Sally, from an investment advice perspective, I mean, clients would look to London clearly as a centre of excellence. I mean, how do you see new clients coming to your door?
I'm glad you raised that, and picking up on what Hannah said about the professional expertise. I think London has grown as a centre for families to have investment expertise on the ground, much as they would like to have some locally. I think the challenge is access to deals, access to investment talent, access to companies, and you just don't get it in the region. So we're actually seeing more and more families wanting to have local operations and to be able to access international expertise in London.
And some independence and a different view, perhaps, isn't it? The value of that is not to be underestimated.
Yeah, I mean, that's what clients come to us for, is the fact that we don't have any investment products of our own. We know the whole marketplace, and they need unconflicted advice and independent ability to assess what fits their particular needs.
Thank you. And Carlton, just to bring you in, I mean, as Hannah mentioned, the London footprint is created around a lifestyle. Saudi families want to invest here and be here. And I imagine then that brings you into the picture if they're looking at their overall estate tax liabilities and trying to plan for that.
Yes, of course, David. Clearly, we had the de-enveloping quite a few years back now, which so the choices are much more, either pay ATED or be involved with something like life insurance. Obviously, we've got to be mindful of the religious bent of the country and the cultural background to that. But there are many Saudis who are open to using life insurance as a form of liquidity to help pay the UK IHT bill on the London property, rather than having to find probably several millions of pounds, or even in some cases tens of millions of pounds, to pay that IHT liability before it passes on to the next generation. So certainly that's we've done cases like that, and I expect we will continue to do many more cases with the UK IHT footprint.
And Sunita, just to bring you in, I mean, on Carlton's point about clients observing Sharia principles, it's a topic we've talked about a lot in the past, and having the right advisory team around. If international firms are coming together, they need to do so really trying to understand what clients are about, their values, and what they're trying to achieve. I mean, how do you think you can work with other professionals elsewhere to help guide them on such issues to make sure they get the right solution for clients?
Yeah, I think it's a very interesting question, David, and it's something that I'd really love to see the international advisory community kind of embrace, because actually Sharia, it's we refer to it as Sharia law. It's not Sharia law. Sharia is a way of life. And there are certain principles that the Islamic faith abide by, but interestingly, similar principles of forced heirship exist in places like Europe and even on the subcontinent. I think the advisory community would definitely be well served by learning a little more, taking effort to learn a little more and understand what it relates to. What are the sensitivities? What are the key points? Because I do often sigh when I hear advisors saying, well, how do we get around it? You can't get around it, and that's actually quite disrespectful. So if you understand it and understand the impact of it, and actually understand that this is deeply intrinsic and it's actually about the fair distribution of wealth, first and foremost, then that's the first step in the right direction. And then to understand how the wealth could thereafter be fairly distributed. And what I mean by that is distributed to those that play a greater role in developing and growing this wealth, as opposed to those that don't want to take an active role in the family business anymore. And perhaps their interests lie elsewhere. So perhaps empowering them to follow their dream or diversify, if that's where their strengths are. Perhaps enabling some of the family members that are living outside the kingdom, for example, and saying to them, let us help you go off, for example, and find out more about sustainable investments in the Western world. I mean, for example, the Channel Islands of Guernsey are very big at the moment on green and sustainable investments and things like that. So there's lots that can be done that if you just dig a little deeper and understand what the family truly aspire to be. But I feel also that the advisory community should start to then take a more proactive role of advising families in the kingdom. And just picking up on some of the examples we were talking about, Hannah and Angela and Sally, in terms of acquisition of property is a very common example. Yes, absolutely. Properties in the UK are still deemed to be very prized, they're very attractive, they can be used, they could be used as investments as well. However, my heart again does sink every time I see families that haven't been advised at the time of picking up their dream property in, say, Mayfair, about issues that Carlton's spoken about, i.e. the estate duties and the ATED liabilities. And just this week alone, I started my week speaking to a client who has now realised that he's got to pay HMRC in excess of £450,000 on a property that wasn't worth more than £3 million. And that's an expensive mistake. But so things like that are easily preventable, and solutions are there for all the clients. And it would be great if we, again, became more collaborative to find a holistic solution to help the clients achieve their objectives.
And this is certainly our goal, is to try and create that dialogue
Yes.
between advisors for better understanding.
Yeah, absolutely.
And Carlton, I imagine those kind of scenarios that Sunita's outlining, that is something you see where just insurance solution was available, but it wasn't tabled for a variety of reasons, perhaps not being fully familiar with the product or any other matter of things. But is that something you see, or do you feel clients now familiar with looking at their estate tax liability in the UK and thinking of insurance as a solution?
No, they're not necessarily familiar with UK inheritance tax, and as Sunita rightly said, they're not familiar with ATED either. They are also often not familiar with life insurance because it hasn't been tabled. And it's a funny beast, life insurance. I think it's often seen as the black sheep of the sort of community, but I think it really can be used properly and in a sophisticated way to add to what trustees and structurers can add by providing liquidity for cascading the wealth down to the next generation. And in line with what Sunita also picked up on, we must have great respect for Sharia and the cultural beliefs and the religious beliefs of any nationality we're dealing with. And I do hear too frequently people saying, "How do we get round it?" And I agree with Sita. I think it's too strong. It's not for us to come and impose our values on people in different countries. So, but where we can help is say, this is one of the things you might want to consider. And of course, then the family can consider it once it's been tabled as a range of solutions. And they may then at that point dismiss it, which is absolutely fine. But at least present it as one of the solutions, because I think it can be super helpful in their estate planning.
How do you see it, Dave, in terms of the Sharia advice and the sensitivity around that and getting the right tailored solution for clients? I imagine it's something you see and have dealt with many times in your career.
Yeah, we're just dealing with one at the moment, and so I must say I did have to look up the traditional asset split, etc. for the case I was working on when we submitted it only about 3 or 4 weeks ago. And again, it's working with the professional partners. The lawyers and the structurers on this call will be super. Some of them will be super good at that. And it's working with them to say, look, how do we position this in an appropriate way to bring it to the table, and then having that probably off the record conversation about, right, okay, so how does the family want these assets split? Because ultimately there will be a trusted advisor in the room, and it's normally a conversation you can have with the trusted advisor over a coffee to say, how would the family view this sort of investment?
And I suppose this is part of a broader conversation on great wealth transfer of assets to next gen. I mean, Sally, I know this is an area you've looked at and worked with families on. I mean, what's your perspective on the transfer of wealth in families, particularly in the Saudi context?
Thank you, David. Well, I thought I would sort of just talk about a few of the trends that I see in the next generation that are inheriting. And we've all seen the huge numbers. I think the latest number I saw was over $1 trillion in the next 7 years of wealth in Saudi that's going to be handed down to the next generation. And I would put it under the sort of 4 mores. What I see in that transfer is that the next generation want more risk. They've already had a certain amount of wealth and live with it. They haven't necessarily made it themselves. So that instinct of, I just need to preserve it, give it to some good banks, as long as I don't lose anything. We've moved to the next stage with that generation. They want more risk, many of them highly well educated. The last decade has been exciting for private equity and venture capital. They want more of it and more direct stuff. Now, the challenge for advisors like myself is to kind of point out that nothing goes up in a straight line, and that what happened in the last 10 years may not happen again. But there's more around risk. Sunita mentioned before around impact. There's much more focus around having sustainability and impact within a portfolio, not just on the philanthropic side. And the challenge around that is the measurement and time frame. Because people are so used to in investments being able to measure something at the end of the year. You can't measure impact, and how you measure it is a very big challenge. And those of you who are trustees, face that to make that trade-off between impact and financial return. The third more is around professionalism. I think that people who are inheriting the money would like more professionalism in their family offices. Fewer family advisors who've been there for a very long time and are maybe a bit past their sell-by date, and the family's very loyal to them. But actually what they want is a bit more independent advice, more professionalization around governance and succession planning. And the last more, if you like, is more direct control. Next generation want to have more control over that money and not just leave it to the family office. They want a level of engagement. And what we've worked with some families is actually creating a pot within the family office where they have a bit more control, and you have a little family office within the family office. So it's within the asset allocation, it's within the investment framework, but it's a bit independent and people can learn. It can't be too damaging, but it feeds for the next generation to say, I want to do it differently, but I don't want to ruin the setup.
Thank you for sharing those. I mean, Dave Lange, you picking up on some of what Sally was saying about the next gen in family office setup, for example, setting up a pot to use investment or sustainable investment themes. Are you seeing new structures being set up with these different sort of next gen focused frames of reference?
Yeah, I think just to kind of borrow a little bit from what Sunita said earlier as well, in terms of separating out sort of the next generation in terms of ownership, who's going to be involved in the ownership of let's say the traditional family business, and then who's actually going to be involved in the day-to-day management and operation of that. That's a sort of a second bucket. And then the third bucket is really, do we take some of the money out of that structure and put it into a separate bucket, which is under the sort of umbrella of a family office or investment holding company or something like that. So we're definitely seeing that as a trend. And typically we're seeing the sort of the next gen being involved in that third bucket. So they're really excited and interested in going into, and what we also see is the term sort of single family office is generally being thrown around quite loosely. I think the next gen likes the sound of that and likes the idea of it, but at least in the DIFC we're seeing a much more of a formalization of that. So there is now a new, there's always been single family office regulations here, but there's now been a revamp of that legislation to try and cater for this next generation that they know is up and coming and wanting to get involved in investments and taking, as Sally said, more risk. I definitely concur with that. The other interesting thing we're seeing as well, when we're talking about the next gen taking risks, is actually sometimes setting up these sort of pods within the actual traditional business to look at how they can digitize or bring in technology into the existing family business. And they can typically do that under a separate legal entity, but still underneath the actual traditional business, but as a separate legal entity. And the next gen can kind of sit there and have some sort of allocation of financial allocation, which they can then use to try and test different things and see how they can kind of bring a different sort of element of technology and digitization to these historic sort of, let's say, manufacturing businesses, for example.
Well, thank you. And Sally, just picking up on something that Dave said there, you know, sometimes the appeal of having your own family office and entity is there's an allure there, but actually the reality is that it's complicated to run, and firms like yours can actually just help people with solutions there where they don't actually, when they analyze it, need that level of new entities and structures being created.
Yeah, I mean, I think the biggest challenge for having your own single family office is you need a lot of resources to be able to staff it at the level that is needed, which is why professionals on this panel and ourselves are often the independent non-exec who can actually complement and bring in and help support a structure where it makes no economic sense. And the other thing is that actually a lot of younger entrepreneurs are super busy and don't want another business to run. They don't want that hassle. And in the Middle East, there's always the integration of family into the family office as well as the family business, and dealing with some of those challenges. Some of them are just not wanting to deal with that now. So it's a very interesting dynamic. And as we all know, each family and each family office is completely different. But there is this trend of saying, I can only focus on one bit, and that will be my area of expertise within the family office, let's say venture capital or something, and then I'll go externally and get complementary skills.
Thank you.
Advice.
And Hannah, just to bring you in, I mean, what's your perspective on next gen, on the new clients coming through that you're dealing with in the region, and what their
so much of this resonates with what we see, and actually, like any families where they've built their wealth within the family, not just in Saudi actually, but globally, there is just sometimes that natural, obvious sort of breeding ground where you are got objectives of family members versus the objectives of what that business is doing. Because don't forget, in Saudi, it is obviously largely family businesses. That's where the wealth comes from. They're all diversifying and there's a lot more mobility, but ultimately the passing of the wealth down within that family business is a completely different view and a different approach than perhaps dealing with other sources of wealth. And from my perspective as the lawyer, seeing them on the horizon, sometimes it sort of breaks our heart because you can see it coming and no one's done anything, and we've seen it before and nobody's identified where there's weak spots or where there's different things that family disputes might arise. So I think the successful families that have done it have exactly what Sunita and what the panel are saying. They've been actually thinking about this for a while, and they've been thinking about what are these family members doing, who's going to have the control, who's going to actually actively be involved, who is going to just be a recipient of the wealth, but not necessarily, be a decision maker. It's very different when you've got several different branches and several different people involved, rather than historically it's been with one branch or sometimes even just one head of the family member. So to us, it's quite obvious that that's where disputes are going to come in, but it's about really looking on the horizon for where they can kind of be headed off. Obviously from the legal side, that's with the structuring that we've all been talking about. But I think as well, there's a bit of identification of where the next gen are coming in, and they're bringing different things to the table. Again, from the legal perspective, they've got different tax footprints, they've got different legal footprints, they've been living in the US and they've been living in the UK, and that gives them a different exposure. So we quite often need to say to families, it's not everything being in one pot. It's about saying these family members you've just talked about that are saying actually they want to do something different. The oil, gas, shipping, commodities is not what they want to be making their money in. They can go and do something else. That's put into a separate structure, giving a little bit more control, but then probably somewhere else they lock something away to say, well, actually, this is a real protective measure for the family wealth. It isn't going to be disrupted by what the next gen are thinking about or what they want to do. So it's mapping all of that out, I think, and giving different access to different elements. I think where the next gen are for me is a key question. Where are they going to be doing this? Where are they going to be doing their investments? Means that you're unlikely to then find something that's going to tick the boxes for keeping the family together and keeping the wealth together, because it's just not going to be flexible enough to allow that generation to go off and do all the things that they need to do, whilst also protecting the family business, where you don't want them to perhaps have all of that control, decision making, etc. So that balance, I think, is really important, and we end up finding with families, I think, that it's a multiple pot of things. It's a multiple, you might have one structure in one jurisdiction, you might have something very much more robust, for the family business that'll look different to what you're doing outside of Saudi.
Angela, just to bring you in on that, I know this scenario you're interested in. I mean, just chiming in as well, and from what Hannah was saying about the structuring options there, need to reflect the reality.
That exactly chimes with where we are. We've got a mandate at the moment, and the family have together owned a bank for a really long time through a couple of layers of structure. And as is the case with a lot of families now, we're not dealing with siblings, we're now dealing with cousins. We've come down another layer. With the family that we're working with at the moment, the patriarch has gone, and at the sibling level, the family really felt a sense of loyalty. Perhaps there was this was in the family charter as well, where they would all stay in the business. But now we've come down another level. We've been approached by 2 members of the cousin branch to say, actually, we want to extract our value. We don't really want to participate in this particular business. We'd like to do something different that's more in tune with our skill set. And I think where there is that sort of 3 generations, there's less pressure on that next generation to be as loyal necessarily as to the family business, which was appropriate at that time. So we're seeing sort of at that cousin level a bit more flexibility about what the families are going to go off and do. But there's an inherent tension there and a sort of sense of disloyalty if you are stepping away from what was intended in the family charter and you wanting to branch out and do something different that sort of chimes with your passions or your skills. So it's definitely a really interesting time, and there's an enormous amount of structuring solutions there, but it all has to be dealt with really sensitively, as I think was Sunita's point earlier.
And Sunita, when you kindly arranged in Riyadh a meeting with Hourani colleagues and guests at the end of May, this issue that Angela flags about the family business making the transition down the generations was something we discussed at length. I mean, what are some of your perspectives in navigating those difficult pathways?
Yes, so I think first of all it's a no one kind of prescribed method of doing that, but again reflective of cultural nuances as such. The one method that does work very well, and we've seen families that are very successful and remain harmonious and truly harmonious, are the families that start to introduce the next generation at a young stage, at an appropriate stage. We're seeing a lot of, and again, picking up on what Hannah had said as well in terms of tax and global footprint, we're seeing a lot of the next gen actually returning to the kingdom to contribute with the benefit of having received an education outside of the kingdom and learnt about specific industries or sectors where they could then come back and truly add value. And so an inclusive method of governance and an inclusive method of running the business and managing the business, I think, is what really is the key to success, but not so much so that it becomes draconian, but so much so that, again, you're giving families the flexibility to choose should they wish to participate and add value, but also the freedom to say, actually, this really doesn't interest me. How about I go away and help diversify the family's footprint into XYZ in terms of industries or geographic location? Or perhaps even what we're seeing at the moment is certain family members raising their hand and saying, Yes, we aspire to establish a family office. And as part of that aspiration, I would be keen to be the family member going off and setting this up in another jurisdiction with a view to where we want to evolve and eventually kind of position ourselves as globally. So every family is slightly different, but certainly the families where we're firsthand, I would say, hand on heart, seeing a change in terms of governance. And it's no longer that draconian kind of patriarch who takes all the decisions. I don't think that kind of autocratic method of governance is really going to be a viable, sustainable one. And as we educate our next generations, we have to involve a democratic perspective.
Thank you, Sunita. That's great. Got a question in the chat. I'm going to bring Carlton on actually, and perhaps Hannah as well to answer. Carlton, it's a question to say, looking at given that IHT, given that trust and SPVs no longer provide protection for IHT in the UK, what are some of the options and alternatives to life assurance? So it's to sort of say, what are the things that you come up against when you're looking at solutions? So if a problem's tabled to you, how do you approach it and what do you benchmark against?
Well, I think if the question's around how do I pay less IHT, then I think it's still applicable. Just if the property's got original debt on it, then the debt is removed before the equity is then, basically the equity is the exposure to IHT. So, and of course, the last 10 years that's been fantastic because interest rates have been sort of 1 point something, 0.1 something. What I have seen recently, so if the property's got original debt, that can be discounted for the IHT bill, but not remortgages or new debt. Where I've seen a client recently, based somewhere in Europe, there has been a significant movement in interest rates. So whichever way you look at the numbers, they don't work anymore. From an IHT perspective, it may be nice to think, well, I've got this debt on the property, therefore there's no IHT on it. But when you start compounding up even 5 or 6%, the numbers don't work. You quickly get past 40. So that's really one of the only other sort of vanilla ways I know. But Hannah may have some better ideas.
Hannah, when you're talking about IHT planning with property, UK property now in today's environment, what do you discuss?
It's generally a lot more difficult. The fact is, it's totally, these things are transparent, I think is the question that's been raised. So there's a few things, and it's about keeping it simple, and it really depends on the level of what you've got going on. We do see families that want to diversify the ownership. So actually, rather than just having everything under the name of one person or one settlor, you can talk about spreading that ownership. You're kind of kicking the can down the road a little bit by just saying to that particular investor, well, we can spread your exposure to it, but we're sort of putting the next gen into the IHT net. So it's not a silver bullet at all, but we do see it because it's simple. You can say, well, let's have a few owners here. Let's not just have everything vested in one controller's name, which kind of also links back to the discussions we've been having. And you can maximize as many exemptions as you possibly can within the family. But are you just creating, you've got to then think about creating, again, what we've just talked about. Do you want 7 co-owners of a property? Do you want, all of those things? So it comes with pros and cons of each side, but that's not uncommon to see. Also, I'm just going to throw in there a little bit about the Sharia conversation that we were having, because actually sometimes what I do see on the ground is that opportunity is where perhaps with the assets outside of Saudi, that it is where the next generation are equalised. So it might be that actually the parents are saying, well, look, we're going to buy all these properties in the UK, we're going to invest in the UK, but that might be where we want to see actually our daughters are going to be the owners of these, and we have co-owning female sides of the family, knowing that perhaps they are going to be sort of equalised. That equalises them generally throughout the global ownership, just as a side point. Then there's the insurance point that obviously we've spoken about. There is still space for trusts owning property, owning real estate. There is still a space for it, but it's got to be planned for way in advance. And it's about accepting a level of IHT as opposed to one big IHT bill on the death of a particular family owner, a particular family member. So there are some things that can be done. And I agree, I think the debt leveraging point is that's changing really quickly. And I'm sure, Carlton, you're seeing a lot more activity as people, that was an easy solution, you know, leveraging against the property was an easy fix for IHT, less so now.
And just, Hannah, as a quick follow-up to that, there's another question gone in about that topic, just saying, what do you think of freeze of growth shares for IHT planning on residential investment, family investment companies? Is that...
Yeah. Absolutely. Yeah, we are seeing a little bit more of family investment companies. There's the revenue, the HMRC here, they sort of cast a bit of a warning shot that they didn't particularly like these family investment company structures. And there was a bit of, we had to be quite careful about them. I think there's also the point about the careful valuation of those shares, and then careful about what the growth really is in terms of what we're doing in sort of lowering someone else's estate for benefiting others. But the family investment company space is growing. We do see it. You've got to then also be careful with things like the other taxes, stamp duty and those sorts of things. So generally, I would say if it's going to be an investment property, then we're seeing it a bit more. For the trophy properties, maybe where the family are going to use it, perhaps sort of less commonly used on the family investment company now. But yes, effectively trying to accept there's an IHT liability at the outset, but shifting that growth to the next gen is an ability to do.
Thank you. We're just coming into the last 10 minutes of this webinar now. There's still time to put a question in, but I'm going to come to each of our panel now, just for not a closing thought, but a thought around what families in the Kingdom of Saudi Arabia should be thinking about in terms of preserving their wealth. If they're looking down the long generational view, they want the succession planning, they want the family wealth to be preserved over the long term. I mean, perhaps, Sally, I could come to you first as to how you think clients should be positioned for that.
Well, I'll start by picking up on a point that Sunita made. I think communicating at an early stage and clarity within a family as to who gets what and what the plans are avoids the potential destruction of wealth. A lot of wealth is destroyed through disputes, divorce, breakup. So that would be my first bit of advice, is actually have clarity. But in terms of ensuring wealth over the long term, particularly that you've got patient capital, is to invest rather than trade, to diversify but not duplicate. And a lot of families don't really see the difference. They give money out to lots of different people, but they're actually not diversifying. And watch out for fees. Fees compound. And are you making sure you're getting bang for your bucks? And whilst, you know, it's great to have a lot of private equity and hedge fund exposure, you've got to be in the right ones. So watch out for fees and always make sure that you've got enough cash to meet for the unexpected, that you're never in a position, ever in a position where you're a distressed seller, because that's how you lose money. And, you know, a lot of people will have forgotten that in 2008, the most sophisticated investor in the world, the Harvard Endowment, had to raise $3 billion to meet their private equity calls because they mismanaged their cash. So critically important to preserving wealth over the long term.
And Carlton, I mean, liquidity is a key part of what you would put front and center, isn't it, for clients thinking about protecting wealth over the long term?
Life insurance is an amazing asset class in itself. It's often overlooked. It's kind of probably out there on an outlier, but it's incredibly safe. Cash value life insurance is incredibly safe. It's one of the safest assets that anybody can own globally. There's probably a further debate about that, but when you need liquidity, you can go and tap into your life policy. Whether it's got cash value, you can take policy loans. If there's a crisis like we saw in COVID, where we saw a business which was nearly closed down because there was no cash flow, individual, high net worth individual goes to the policy loan and borrows money from that. So coming back to Sally's point, there's liquidity. There's a safe asset class there as well. And of course, it generates even more liquidity for the next generation. So those are my closing thoughts on preserving wealth.
Thank you. And Dave, before I get your thoughts on preservation of wealth, there's a question I just want to put to you from Peter Greaves in the chat, which is saying about the Australian real estate market is offering some of the highest returns in the world currently. A lot of Gulf clients do look to London, as we've discussed in this session, but what do you see in terms of people looking elsewhere, picking out particular niche and hot markets that they haven't historically invested in?
Thanks, David. Yeah, look, I think it's an interesting question. I think everybody always sometimes thinks the grass is greener on the other side. So I think what we're seeing, for example, is international investors are looking at the Dubai property market and just thinking, well, this is the next sort of get rich quick opportunity and a sort of a once in a lifetime opportunity. And so we're seeing a huge amount of international investors piling into real estate here in Dubai. I think some of the statistics are something like 60% of transactions in the market at the moment are off plan. So, you know, and that's really accounting for international investors. Again, if you drive around some of the areas, Business Bay, downtown, Marina, a lot of the lights are off, and that means that those are investor-held properties. That's causing a bit of a shortage in supply and therefore increasing demand. But just going back to the question now, you're seeing also clients that are sitting in the Middle East. We're actually seeing the exact opposite as well. Some of the clients that have massive exposure to real estate here are thinking, hang on, we've seen this movie before. We think the real estate market is a bit overheated. Where else can we go out and look? UK is a perfect example. If you look at sort of some of the buying opportunities that you might have there, if real estate prices are down in certain areas, that creates a huge opportunity to buy. And probably I don't know much about the Australian market, but the fundamentals might be the same there. So I think you're seeing basically traffic both ways.
Thank you. And Hannah, just to bring you in, I mean, as Dave says, London a buying opportunity now for real estate, but more seriously, I mean, how do you help families protect wealth over the long term? What are some of the fundamentals they should be thinking about?
Look, from the legal perspective, there's a whole raft of kind of structuring from your family governance, whether it's going to be enforceable and enshrined, like Sunita said, that gives it a lot more robustness. So definitely those conversations. But in terms of where those structures sit, what would be my sort of end comment on it is using them well, because actually, unfortunately, I do see in Saudi and other jurisdictions a lot of sort of that are structuring a trust or a foundation or something is kind of, oh, we can just put that in place and then that's going to solve everything, and we put it in a box and it's a bit of paper, and nobody's really using them for the kind of flexibility and the robustness that they should be. It kind of comes out again when there's a problem, rather than looking at it and administering it in that way. That's where people like Dave obviously come in relation to that. It's that ongoing conversation with families. So and I think my key point as well is the next gen and that flexibility point. It's about being able to manage the financial affairs, to be nimble, to move, and to know what the next gen want, how they're going to be using it, where it's going to be. It's a very different very different structure than just one jurisdiction with the key assets being the family business. It's a different horizon. So flexibility and using your experts and those structures well, and doing what they're meant to do.
Thank you. And Angela, any closing thoughts on how people should be thinking about protecting wealth?
Yeah, probably the first one would sound a little bit self-serving, but I would always say to clients, take advice, but not just take advice, take a second opinion as well. So, ensuring that they're well advised, and then they can either act on that advice or take that away. It's surprising the number of clients that we see, as Sunita was saying, that and I think in Carlton as well, where we come across them and it's too late. They've already made a huge mistake and not done pre-immigration planning, or they've purchased something without planning. So yeah, definitely step one would be take advice and take a second opinion and make sure they're comfortable with the advice. And then similar to Hannah's point, I mean, I still really love the family charters and family constitutions, but I don't think they can be put away and sit in a drawer. So I think maybe 10 years ago, we would see the accountancy firms had a very cookie cutter product, which was the family charter, which the families would engage with that, and then it would go and sit, it would cost £100,000 and would go and sit in a drawer somewhere, never to be seen again. But I think if we can enshrine in those family charters that there will be a meeting every 6 to 12 months where that's reviewed, and get the families to sign up to the charter, I think it will become a bit more of the family's DNA, rather than being a product or something that is forgotten about. So those would be my tips.
Thank you. And finally, Sunita, this webinar is really the start of our build up towards the 7th of November. Really looking forward to our gathering planned for Riyadh, then where we'll develop all of these topics of conversation and spirit of collaboration. But did you have any closing thoughts as we come towards the end of this hour?
Well, my immediate closing thought is what a fantastic panel and what a great set of experts. And the fact that they're coming out to Saudi with the right mindset, the right experience, and the right perspective is incredibly promising. Preservation of wealth is one aspect of it. Preservation of ethics and a culture is another aspect of it. And both of them go hand in hand. But there's a difference between drawing up a wealth preservation structure and drawing up a structure that preserves a family per se. And if the family no longer exists and are no longer together, then there's never going to be a preservation of wealth. So it's a topic that definitely look forward to kind of discussing in more detail when we have the event on the 7th, and incredibly excited. And I think there are people on the ground in Saudi who are also really looking forward to meeting everybody. So very much look forward to that. And thank you, everyone. And thank you, David.
Fabulous. Well, look, thank you for joining us for this hour. Thank you to the panel and those tuned in and the questions that came along. We are looking forward to coming very much to Riyadh on the 7th of November, and I wish you a very good afternoon. Thank you.